Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Auskerson, one of the hosts for today, and you can see the CEO of the AICPA, Mark Koziol, is with me. Mark, today is Thursday, May 22nd. 2025, and it's a classic town hall day. As I know our listening audience is well aware, the bill, which is called One Beautiful Bill, passed the House this morning, so we'll be unpacking that with a number of other items, but welcome.
Thank you, Eric, and it is. This takes me back to the old town hall days of PPP. Here we are again. The only difference is the bill came out the night before we're on town hall, not the day after, which PPP typically did. So I feel great. A lot of good things to talk about today.
We've got a lot to talk about. So we are absolutely going to kick things off with a DC update, bring Mark Peterson on board to join us and discuss everything that's happening in the DC area. There's more than just the huge bill that was passed last night. Then we're going to have a strategic discussion with Renee Lacerte, the CEO of Bill, on the state of digital transformation and payments. And then Mark Koziol, you're going to be leading a discussion with Dan Dustin, the CEO of NASBA, on the state of the CPA licensure, some important updates there. And then Melanie Lauritzen is going to be doing the technical updates. So Mark, we got a lot to cover. So let's bring up Mark Peterson. Mark, great to see you, huh? Did you sleep last night?
Yeah, I got a little sleep. You gotta just get it in between all the action, Eric.
So we're going to get it here. Breaking news. All the news agencies covered it. The vote was 215 to 214, and there was one member that actually was asleep and wasn't able to cast his vote.
There was one present, and then there were two that actually did not vote. And one of them, yeah, he's getting hassled because he fell asleep. But it was an all-nighter. It was another all-nighter.
They're all fighting hard to get home for the holidays. So
nothing is a motivator like smelling the jet fumes of going home, Mark.
So, Mark Koziol here. This is the slide that you've been leveraging since day one, coming on board as CEO on January 1st. So it continues. The change continues to accelerate. And one of the first things you talked about, I think, in the January town hall was this tax legislation.
We did, and we made predictions, and I'm glad I didn't bet Mark Peterson because I said that we're going to have two bills like we've had all in the past, and tax won't happen until December, and yet here we are. Now, it's not over, right?
Oh,
and
it's not.
Because this bill passed, just to reiterate to everyone, we just finished the third inning. We still got a lot of baseball left, and so this is the House version of the bill, Senate version. Mark will explain all this and how it works, but it is a step forward. There are many things that we liked. I mean, generally, this is really positive for business, but there are a few things that we are still working on with Congress, with Senate, and the like that Mark will talk about, PTED especially, and you may or may not have gotten an alert. But I'll tell you, I just flew back late last night from San Antonio. I was at a firm meeting, and I can't tell you the number of people who didn't even know about the PTED issue, even though we've been pretty loud about it since last week up at council. This 1,100-page bill. There's a lot of things. Again, and I think important for our members to understand. There's going to be a summary. You'll see summaries out there. You're going to see a lot of common brands, common titles that were in the TCJA, but many of them with a little bit of tweaks. I think a great example of that is the SALT deduction, moving from $10,000 limitation to a $40,000 limit with a $500,000 cap. So if your AGI is $500,000 or more, you get phased out back down to the $10,000. So there's going to be tweaks to this. Your clients are going to be asking, and again, you could give them the information today, only for some of this information will likely change by the time we hit the Senate. So Mark, to that point, the stage is yours on everything that's coming at us.
No.
Well, Mark, we got a number of comments coming in, and just at a very high level, I mean, and Mark Cozy, you just talked about there's positive business aspects to this bill. There's concern with the town hall community related to the state of the deficit and the bond markets are jittery. So, I mean, just again, the AICPA's overall position on the tax legislation. I mean, and then we also, Mark, this might maybe something you want to highlight, Koziel, to the audience. Our concerns around the state of the deficit.
Yeah, I mean, and I think that's I focus on the bill more so than the consequences on some of that, because we are adding to the deficit. I think we have this whole state of federal. We need to be focused on the federal government and letting them know that we need to have more fiscal responsibility inside the government. This bill, again, on the extensions, the pay-fors that are there, we're hopeful in some of the ideas around how some of this could pay for are outside of the tax bill. But overall, fiscal responsibility still is paramount to us, and I think needs to be a focal point. But right now, today, that's all we can talk about are what the current tax situations are, because your clients are going to be asking for that.
That's right.
And we have, just to add to that, we have a history related to fiscal responsibility and have led efforts in order to drive, what has actually happened to the financial statement of the federal government on Capitol Hill. We've got legislation that we've supported for years that would actually bring them together, bring in the comptroller general to go through the financial statements. So, we're not going to pick rates. We're not going to pick, if entitlements are being cut. But what we do urge them to do is whatever you're doing on policy, it's going to have an impact on the policy statement. You should be aware of that impact. And then, listen, there's going to be, a political reaction to this legislation, just like there is in any major legislation. We're really focused on, practically how can we advise the practitioners and their clients and businesses, what they should be thinking about as it moves through the process.
Right. So three big themes coming in right now. And, one is on, more information related to this tax bill.
Yeah.
Other theme here, fiscal responsibility. Other theme just being, the economy and tariffs. So Mark, just because we're going to, before we move to kind of more details with Mark Peterson, what we're talking about here is a trusted advisor role related to all three of those items. And we do have a major effort related to fiscal responsibility that's been underway for a number of years at the AICPA.
Yeah, we've talked about that and stepping that up a little bit this year as we come out of this. But, the focal point, and it's the here and now. So I want to, again, focus on what you could be talking about your clients today and tomorrow, because that's really, they're going to be asking you questions around it. And then we can refocus on fiscal responsibility. This bill is passed. Now it's a matter of the Senate passing something. I do think the fiscal responsibility conversation will happen more so, Mark, in the Senate. And
it's not going to be enough to stop this bill, but there is awareness and a growing urgency around fiscal responsibility and the impact on debt and deficits. That conversation died down during COVID, but it's coming back.
Yeah.
And so we're going to hear it from both sides of the aisle. I don't think it stops the bill.
Got it. And so when we think about trusted advisor in general, as you mentioned, Eric, about tariffs, and I know it's in our resources later on, but we put up a tariff support page on all the things we have available around the tariffs today. And I've had a lot of conversations about this. They're top of mind. And there are some tariffs that are currently in play. It's not like all of these got postponed. I had a friend of mine who manufacturing facility in North Carolina got a bill for an additional $50,000, and it was on tariffs. He said, well, wait a minute. He said, I looked at the bill. I paid the tariff on the entire product, and I was paying the tariff on aluminum and steel, and that's only a portion of the product, and I'm paying it on the assembly of the product because the aluminum and steel is a portion of that. And he's like, so, I'm talking to my firm right now to figure this out, and you have clients out there, they're already paying tariffs. The question is, are they paying them appropriately? And should we be helping our client to navigate that?
Well, thanks, Mark. Let's bring the slides back up. Let's get into Mark Peterson. Is there anything you want to highlight related to this press release that's in the resources?
No, I mean, we're doing the team, the tax division, the volunteer committees are going through all this. One of the challenges we have, which Mark alluded to, is just the process. You have to kind of, this is a point in time and it is not the end product, but we're doing the best we can in order to rifle through this, get as much information as we can, get it out to the membership to give you, concepts at least and ideas to talk about with your clients. But again, I think there's going to be a political response to this, but for the most part, business is happy with a lot of the extensions that are occurring and certainty around the rates and a lot of other things in here. Now, again, there are certain sectors, on the renewable side that aren't going to be happy. And then we've, again, got this pass-through issue that we're going to talk about. We'll go to the next one. So we've used this slide in the past, Eric, and this is really just kind of the roadmap of how reconciliation works. And just to repeat it, the reason that reconciliation is used is because you only need a simple majority, 51 votes in the Senate versus 60 votes. There are requirements, though, that things have to pass what's called the Byrd Rule and have to have an impact on the budget, which is going to come into play. Definitely. The House doesn't have to worry about that. If they want to get things done, what they'll do is they'll send things over to the Senate that they think will comply with the Byrd Rule. But what will happen in the Senate is they will work very hard to make sure that they're in compliance because it's the Senate parliamentarian that makes the call on this. And so, I mean, again, this is, the last 5 days has been crazy. All of the committees reported out, including the Ways and Means and the tax provisions. They bundled it up on Friday. The Budget Committee has to take it up in that bundled form. That vote went down. They stayed around all weekend and came back to session Sunday at 10 o'clock at night at the Budget Committee, knocked it out at about 4 in the morning. And then basically the next step was to go to the Rules Committee. Rules is the last stop before the House floor. They met last night in the middle of the night and they've kept that vote open, for 2 days, basically, in order to negotiate this deal. Ultimately, they got a vote this morning at 7 a.m. To get it off the House floor, and now the Senate's going to be dealing with it. Some of the response to the Senate, getting back to Mark's two-bill point, is we're hearing some senators who don't like the House product. They don't like the cost. They don't like maybe some of the SALT provisions. They think maybe we should carve out some of the more popular elements and then have a second bill that is some of the more controversial ones. So this is not a done deal. I, again, think that we'll hold together into one bill. Now, let me give you some quick timing thoughts. House is done. The goal of the Senate is to get it done by the 4th of July. So that's the goal. We'll see. They've got to come back. They're both gone. Both House and Senate are gone next week. They've got a period of time to get all that work done. If they don't get it done before August, we've mentioned this before, we hit the debt limit. The debt limit is increased in this bill. That's a huge deal. And so if they can't get it done by then, that means that they've got to run the debt limit vote separately, which is a huge problem with finding the votes. So they want to get this done, not only because there's a lot of political pressure on the Republican majority because of how the tariffs are playing out, but also because they've got this debt limit issue that's in the middle of this bill as well. So there's a lot going on. We're going to have a lot to talk about in the coming weeks, and we're going to start to hear more from the Senate and get a sense, again, as we move into the next third of this. Third is the House, third is the Senate, and then the last third is when they bring the two bills together and figure out how they get 218 votes in the House and 51 in the Senate. Next slide. So, one of the things I wanted to mention about this PTET issue, which is this basically it's in 2017, they got rid of the SALT deduction. Following that, 36 states moved forward in passing legislation that would move the SALT deduction from the individual level to the entity level that would allow you to take it at the federal level. During the Trump administration, and it was the 2017 bill that eliminated, they actually put out a notice, the IRS and Treasury, under the Trump administration, that allowed the ability to move that and it to be recognized at the entity level and a federal deduction. So one of the things that we're hearing as we're fighting this fight related to SALT and PTET and pass-throughs is, well, that wasn't the intent. That was not the intent. This is a tweet from former chair of Ways and Means, who was one of the godfathers of the 2017 bill, saying it was the intent. So one of the things we're fighting is this concept that wasn't the intent, didn't mean to happen. You guys got away with it. We're taking it away. We're making the case it was the intent. Not only did Treasury and the IRS put out a notice, but also we know what the intent of the chairman of Ways and Means at the time was. This is a big deal.
Mark, we did send this all out to the town hall community last week.
Yeah, and I've got to tell you, we're doing it to everybody. We did it to over 400,000 members in the United States. We did it to the major firm group, the G400 group. We did it to all the segments that we have. We did it to the town hall community. This matters. As Mark just mentioned, people are surprised. I was on a call this morning with some law firms, and I had to mention to them that they better pay attention to this because it does impact doctors and lawyers, those of us that are SSTPs. DBTPs. And we're raising awareness. Please take action and make sure your voice is heard. We've got to be one of the problems that they need to solve. We're being treated unfairly. Melanie, in the next few minutes, is going to take you through some of the details.
I think on that, Mark, too, is that, our clients, we need to really kind of get our clients, like you said, the doctors, the lawyers, the dental association. You mentioned that you were in touch with them about this, and they're very interested in helping the cause. So I do think the more we can get to our clients who are affected by this at the same time. And, there was a tweet, and, we're talking about some type of a graphic where we say, optometrist, individual optometrist, no deduction, lens crafters deduction, local pharmacist, no deduction, CVS pharmacy deduction. That shows how unfair it is to small business, and we need to keep that focal point.
It does. And talk about trusted advisor. Raising this issue with your clients that are impacted is a huge value.
Absolutely.
Well, Mark, we'll hop in. I know we've got some additional PTET slides with Melanie, but there is just a couple questions coming in on what did the House do? So just on the final bill.
The House didn't fix it. So the House they had to fix a glitch, I will call it, that had impact a broader community of pass-throughs than those that are SSTBs. They did do that, and they raised the individual limit. But they did not fix the issue that impacts us. And again, Melanie will talk you through that.
So more to come in the technical update. So now,
and
then again, we're going to be, getting out the AICPA. Mark Koza working on a lot of resources related to understand, even though it's not law, understanding the current version of the tax bill, and those resources will be coming out in coming days.
And there are elements of it that, again, the popular bipartisan tax extensions, even though, Democrat, it's not going to be a bipartisan vote. There are provisions in there that were. Some of those are going to stay maybe intact. There may be tweaks and changes, but definitely with lots of webcasts and lots of information. But that tax isn't all that's been going on. There's a significant cryptocurrency piece of legislation that's active right now in the Senate. Senate has worked on this week. And there's a couple of things that are in there that are, we've been working on and are interesting for the profession. And so there's actually a couple audit provisions. One provision is being discussed that would actually be a monthly review by an independent CPA. Now we have questions about, what's the content in that and what are the controls. So there's questions we're working on with the policymakers. And then there's also an annual financial statement audit as well for these cryptocurrency organizations. And so that's something you're going to start to hear more about. We will keep you up to date on that to the extent you're in the crypto world. There's a companion House bill. We still have a lot to work on some of the specifics around the audit requirements and the assurance requirements, but we've got some time for this to play out. Senate is going to be getting it back after this when they get back after the Memorial Day recess. And then we had two hearings this week. The chair of the SEC was in appropriations talking about the resources he needed. He got questions about whether the impact of Doge on the SEC would allow them to complete their missions. He got questions about crypto. He got questions about capital formation. He also got questions about the PCAOB. As we've talked about in the past, there is a provision in the House-passed bill that would roll the PCAOB into the SEC. We don't have a position on that. Wherever they put the regulator, we will focus on quality and meeting those requirements and the public interest. The comments that Chair Atkins made is if it happened, if policymakers decide to do this, that they believe they're fully capable of implementing, the priorities of oversight of the public company auditors at the SEC, even if the structure changes. And then one more hearing this week.
Wait, we don't.
Okay.
Wait, we didn't have. Yeah, there we go. We just I clicked too fast, Mark. Sorry.
No problem. No problem. We don't want to miss Billy Long. So the IRS commissioner finally had his first hearing at Senate Banking, which is a step. He was doing his meetings on Capitol Hill. This is the next step. Most of the questions were from the Democratic side, and they were, there was questions about oversight, primarily related to, recent business experience, working with employee retention credit, tribal issues, tribal tax credits, and then, some issues related to his campaign for the Senate. It's not a surprise. These are the kinds of questions he's going to get. There have been requests for the IRS to look into some of these questions. Billy Long was very open to it. He said, I'm going to let the investigation speak for itself. Again, not unusual. I don't think the tone of the hearing to us doesn't disqualify him. We'll see how it turns out. This still has to play out. A couple other notes, though. He did commit to service, which is, music to our ears. And he also committed to the employees of the IRS. He got a lot of questions about DOEs and the reduction in staff and the stuff that you're going to hear about from Melanie. But he did commit to, whatever the size ends up being, we need to make sure that we're efficient and that we could get the job done at the IRS, and we're focused on service. So those were very good comments.
Well, thank you, Mark. Lots of questions coming in. We're going to get to some of them in open forum, so we'll be seeing you back then. And Mark Koziel, I know you'll be joining Renee and I at the end of our this next section. So lot more to discuss related to what's happening in DC, and we do have the technical update section coming shortly. So now just moving to a great discussion with someone I think many of you know, René Lacerte. René Lacerte is someone who's made a huge impact on the profession. He's so committed to accountants, to firms, to finance leaders. René started his first company, PayCycle, which became really the back end of Intuit's payroll operation. And then back in 2007-8, he launched Bill.com, which is now Bill. And that really has been the on-ramp for so many firms and businesses that have gotten into, and on the firm side, client accounting services, the outsourced accounting services movement, which occurred due to cloud accounting. And, René's focus on enabling firms has really helped them build that practice out. And he's also played a huge role for businesses, for finance members in business and industry. So René, it's great to have you. And, we're in a very, complex time here with the small business environment. So I think we're going to start things off and talk a little bit about that. But first off, just welcome to the town hall.
Well, thank you, Eric. It's always good to connect with you and obviously all the members of the AICPA. A lot of great work happens by the team that's listening to this, and anything we can do to support that is something I want to do. So hopefully the conversation is helpful and help firms actually embrace the technology that's going to change the way business gets done.
Well, great. Thanks, René. So let's, as it's highlighted here, your payment volume is now, 1% of U.S. GDP. So you're seeing a lot related to what's happening with the small business environment. So what are you seeing and hearing from small businesses in 2025?
Yeah, I think the main thing is we've had a period of uncertainty, I would say now, for probably close to 18 months to 24 months, right? There was a year ago, there was a threat of a recession that we talked about a lot. People were worried about that. Then we had the election uncertainty. And then we had certainty with the election. And then we get into this particular, calendar year where we've had a little bit of uncertainty around trade policy and what's going to happen with the tariffs and such. So that uncertainty leads to businesses kind of just going into wait and see mode. And we've seen this over and over again. We saw this with COVID. At the beginning of COVID, businesses pulled back on how they were thinking about growing and managing their business. And we're seeing it now. And one of the ways we know that is the number of payments that happen on a platform on a per customer basis, and which would be our Q3, but would have been Q1 of the calendar year, That went down, slightly from 73 to 70. So down a few transactions. You factor in leap year, maybe it was down 2 transactions. That's indicative of the fact that they're not making as many payments as they would have done a year ago. Same time, we saw that the amount of dollars going through on a per customer basis was also slightly down. So those things, tell us that businesses are actually, preparing for how do you manage your business when you don't know what's going to come. Now, I would say the overall trade policy, it's something you guys already talked about. The macro uncertainty is actually more indicative than the trade policy of how businesses are thinking. The trade policy goes into the macro sentiment that folks have. But I think having clarity, whether it's the bill that happened today, if it gets through, all those things will create more clarity so businesses can plan. And I think that's the main takeaway, is that when there's uncertainty, businesses actually kind of wait. What I do know about SMBs, and I know the accountants that serve them, they are a resilient group of people. You don't go into business if you don't have a lot of, thick skin, so to speak. You're going to go serve your customers, your clients. You're going to make a difference. It's just how you do it's going to be different. So I'm not concerned overall on the SMB community or the accountant community, but I do think that they're going to be holding back a little bit before they get, they need more clarity before they can kind of be investing more aggressively.
Renee, I think your term of resiliency, you've seen these cycles occur a number of times. I mean, you played a critical role during the pandemic, and you saw that resiliency at that moment as well. One thing that I think is helping this resiliency is just the ongoing evolution of where firms are and where businesses are with their technology capabilities, with their standardization. And we just did a survey that is available as a download in today's show resources, related to some of where things stand related to this technology adoption.
Yeah, no, I think it's sometimes people forget how important technology is to accountants in particular. And you think about the evolution of the profession over the last few decades, and every time, the night I was born, my mom was sorting punch cards for an accounting firm in DC, right? So it's been a part of the profession for a long time. And that desire and willingness to actually adopt new technology is super important. And, even with that desire and that willingness to adopt new technology, one of the things in that survey that was very, very interesting is that 97% of the firms believe they're using technology inefficiently. So that tells me 2 things. One, firms are self-aware. That's awesome. It also tells me that there's an opportunity for us companies like Bill, to bring more technology to help firms actually do more for their clients and to do more strategic things for their clients than what they've been doing before. Other things that kind of popped out to me in the survey was that, if you look at the next 12 months, 73% of firms plan to adopt more technology. They believe that seamless interactions with their clients to the tune of 71% are key for client retention. So technology is a critical part of how all the work is done by accountants, whether you're working individually in a large company or whether they're working as an accountant serving many clients. And so what we see happening is that technology is going to be a super important part of it. And we'll talk about AI in a bit, but it's just an evolution, and it's something that was super exciting to see that this was part of the mindset, continues to be part of the mindset and development of the profession as they think about their future and how to help their clients and businesses more successfully.
Yeah, well, let's bring the slides back up. This is another survey data point that came out in a recent state of financial automation survey. And this just shows the importance of more payment types. When you originally brought Bill.com to the marketplace, was focused on really evolving the firms and businesses away from printed checks to ACH. And now the digital transformation, it's so much more than that. It's obviously ACH is still a critical component, but it's using virtual cards and other capabilities, and really giving the CFO or the firm a lot more, and their small business clients many more options on how to manage their cash flow.
Yeah, I think one of the things that was a big aha for me when I was running PayCycle and trying to manage the cash flow of the business, I realized that none of the tools I had used at Intuit helping consumers worked for me. And why was that? And that was because the end-to-end life of a transaction is very, very long and complex. So if you think about as a marathon, the last mile of that marathon is when a payment happens. So you only get a chance to complete the marathon if you've done everything beforehand. And that's what we focused Build on, was actually taking care of the workflow, the document management, the sync with the accounting software. All those things were super important. But now that we've accomplished all that, what we are hearing from customers, from SMBs, whether it's the buyer or the supplier, what we're hearing is they need payment choice. And that's what you're seeing on the slide here, is payment choice is super important. And that opportunity to be able to actually drive more vehicles for how you get paid and when you get paid. So if you think about what we have at Bill today, yes, we handle a check, we handle an ACH, but we have the ability for you to pay a bill on a credit card. We have the ability to have the supplier receive a credit card payment, because that's a faster payment for them. We have the ability for an international supplier to be able to receive FX. We have the ability for any supplier to get an instantaneous payment today based on where the funds are in the system. We have the ability for them to get an advance of up to 30 days across the platform. These are all things, this level of choice really matters. And ultimately, I would say it comes down to kind of three things that I think about when we build our platform. The first is collection. So this is actually pulling in documents, pulling in the data so you can actually do a bill. That's much of the workflow that you see up there. The second is connection. This is connecting buyers and suppliers, making sure that they have the opportunity to connect and transact with each other. And the third is completion. And this is the payment choice that we talked about. Within completion, there's a lot of opportunity and interest in speed, which we talk about, and acceleration of payments. And the other thing is choice. And so overall, when you're thinking about how you manage your client's business or you manage your own business, if you're in a firm, you need the technology and capability to actually get out of the mundane task. This is the thing that I think is the bottleneck for every business, is the mundane tasks that actually don't add value to the business. They're just something you have to do. And that's been part of my goal, is to eliminate those inefficient tasks. And I see AI as a way to continue to eliminate in a much more meaningful way than what we've already done today.
Well, Renee, thanks. And I want to bring Mark Koziel into the discussion now, because when you look at this, you look at the finance digital transformation, you look at the many different categories that are highlighted here, and these are some of the features and capabilities that we know, finance leaders are thinking a lot about. The next slide we're going to bring up is a slide that we use a lot with our CGMA community that talks about digital transformation. But Mark, these are capabilities that you're well aware of, both from a business leader perspective as well as somebody who connects with the firms and members in business and industry.
I'm not only a fan, I'm a client, or I used to be a client, right, Renee? In the days, and yes, 5 years ago, I said when I left AICPA to go run an association, I said, we need Divvy. We need Bill as part of our ecosystem. And it was just a complete blessing to be able to do that. And I appreciate having the Renee Lacerts of the world helping us as a profession, thinking about how to make our job better and interact with our client. And I think this new iteration of AI enhanced insights and making us that true business advisor is the next iteration that's absolutely necessary. It's amazing the information that can come out of this.
Yeah, it's been fun to think about, right? Because when I started the company, I'd go and ask people if they paid bills for their clients, and they would say no. And then they'd say, well, maybe I got one. And then they'd open up a drawer of checks. And they go, oh, I guess I'm doing this for 10 or 15 companies, right? So it was nothing that they wanted to do, but they were doing it because customers were asking. And what CAS has done, Client Advisory Service has done, is actually flip that, so that now what you just said, technology is enabling firms to actually be far more strategic on how they advise their clients. And that's what I think is exciting, because the value add of somebody who sits in the seat and supports multiple clients across years and decades of time, that's invaluable. No AI is ever going to be able to reproduce that, in my opinion. But what AI can do is actually get rid of those mundane tasks, eliminate them, so that you're presented more. They can even present strategic options for that thought partner that the business has in the accountant, can actually present options for the accountant and say, you know what, this is what's best for my client. Let me go to the client with that. So I see this as a game changer for the profession. I see it moves the profession to be more strategic and more advisory and less of the mundane tasks, which obviously the mundane tasks have to get done today. But if AI can take care of that, then that's going to actually elevate the opportunity for advice. And it's something that I'm super excited about.
Yeah, well, Renee, I mean, at a foundational level, as I said when I opened, you helped build out client accounting services, because it was the cloud accounting, cloud bill payment capabilities that allowed firms to move into this category. And now you're just hearing, the passion, the excitement in your voice. what you're offering is just taking it to a whole new level. I mean, the physical and virtual cards with set budgets, that spend and expense category. I've got firms telling me that they're more passionate about that value add than just doing AP processing. So this has come a long way. This is Mark. This is a slide I think you have in most of your profession update decks, and this is what it's about. So you've got 9,000 firms working with you. One thing that CPA.com does is we do have programs and partnerships where we've got a bunch of professional services people on my team that help put in place the strategies that enable the firms to best utilize some of these capabilities to advance their practices. And Mark, we're also doing it in the finance area. So maybe just one more comment from you, and then Renee, and then we're gonna move on to the next segment.
Yeah, this proves that the idea of the board back years ago to bring management accounting and public accounting together was the right move globally, especially. I've seen that. I've talked about it in the past. This slide is the epitome of that, of us getting to that know who and how at the end, and having that advisory service for us, for our firms, our smaller firms especially, to provide that to small business, because big companies have that. They have their finance professionals internally. This is our job as a profession to make sure that we're providing this to our clients as well.
Yeah, I think technology is always an unlock, right? And we've seen this across time over the centuries. And I think AI is going to be an unlock, and especially for creativity and the opportunity for us to kind of say the Fortune 500 have, teams of people doing AP, AR, spend and expense, procurement, reconciliation, all these things that have teams of people in specific jobs. AI is going to be able to bring that to the SMB, to the accounting firm, to be able to say, you know what? Let's get rid of those mundane tasks so you can be that strategic advisor. And the evolution's there, right? This has been happening, I think, for the close to 20 years that we've known each other. Right? This is the evolution of the firm and accountants in general. This is what's happening, and the opportunity to kind of accelerate that with new technology to really help put people in a position to use their most creative energy. That's what gets me excited, and that's the thing that I had the teams working on, is making sure we're doing the unlock, because that unlock is going to create so much more value for society, more value for the accounting firms, more value for the SMBs. And that's what I get, super pumped about. And I've obviously said that a bunch today. So,
well, Renee, what I'm going to do in our newsletter next week, we're going to highlight even your LinkedIn page, because just so people can see how passionate you are about the profession, about working with the firms, with the accountants, and also, what you're doing just to innovate. So thanks for your partnership. And it was great having you on today's town hall.
I appreciate it. And thank you for having me. And thank you, everybody, for being an accountant. It's awesome.
Thanks, Renee.
Here's a bunch of resources that you can leverage that talk about, the client accounting services, payments, and the spend management category in greater detail. So take advantage of those. So, Mark, with that, I'm going to let you introduce the next segment here.
Great. Thanks, Eric. And if we could bring Dan Dustin to the table and go to the next slide, give a little background of Dan. Dan is the president and CEO of NASBA, and he's been with NASBA a number of years. He also worked for a state board very directly. He is a CPA. He is one of us, as he is the leader of the NASBA and the state board community. And I just want to say that it's been, in the very short time that I've had the ability to work with Dan and the NASBA team, just it is such an important partnership for us as we were going through the Uniform Accountancy Act and trying to get kind of caught up to where some of the other states were on getting passage. And Dan will talk about that. But the big news is the NASBA board approved the acceptance of the UAA changes. The AICPA board last week approved those changes. And so now we have it in the Uniform Accountancy Act to try and bring some level of consistency to the profession around this. So I'll turn it over to Dan now and kind of just talk about quickly what is in the UAA.
Yeah. Thanks, Mark. It's great being with you today. And as you said, it's been a great relationship between our organizations working on important matters such as the Uniform Accountancy Act. As you may know, the Uniform Accountancy Act actually started in 1992. We have joint committee members from the AICPA as well as from NASBA working on that. It's a model accounting law that's maintained by that joint committee that states can either adopt in full or adapt pieces of as they look to amend their legislation. The goal, and you touched on this, the goal is to provide greater consistency and uniformity among the 55 licensing jurisdictions.
That's great. And so, this kind of lays out, we all generally knew what the requirements have been for the last number of years, that you had the 150 hours, bachelor's plus an additional 30, plus 1 year of experience, plus exam now, and master's degree with 1 year of experience in the exam. And now with the additional pathway being added, bachelor's degree plus 2 years of experience and having the CPA exam, and providing some level of options really for the candidate, because everyone comes at education differently.
Absolutely. The rationale behind adding this pathway was really to address things like the time and the cost of education. You look at other business school degrees, and they're 4-year degrees. And we're hearing a lot from candidates, from applicants saying, we need a 4-year option. And so, as you know, way back in the 90s, prior to the adoption of the 150-hour model, there was a bachelor's degree model. So there was a lot of significant support to adopt a model that included a bachelor's degree plus that 2 years of experience plus the exam for licensure. And as you mentioned, it's consistent with the others. They all require an accounting concentration to meet the requirements for licensure.
Yeah, and as we were talking about earlier, to show variety and different needs of different candidates. I said I was a bachelor's plus 2 kid. You were a master's plus 1 kid, both graduating around the same time. So I think that's really great. If we go to the next slide, Eric, the other UAA amendments that we have in here, because one of the challenges is going to be, especially in this time of inconsistency, as we try and get everyone up to this additional pathway, mobility is a paramount for us and top concern. And then also the safe harbor rule. Why don't you talk about that?
Absolutely. So with mobility, there's been a shift from state-based mobility toward an individual-based practice privilege. And there's a number of jurisdictions, I believe it's 16 at this point there on the bottom of the slide, that have enacted new legislation. A lot of them, not all of them, but a lot of them have adopted this practice privilege mobility provision. I will tell you that the important part is also, though, the safe harbor language, which essentially says, just like you and I had different pathways to licensure in the past, that if you were licensed under those pathways through December 31st of 24, you maintain that practice privilege, that you don't have to go back, you don't have to be reassessed. Did you, Mark, meet the requirements for licensure that were enacted today? That we give you that safe harbor, that you've met the requirements, you can practice through interstate mobility.
That's really comforting to me, Dan, as a bachelor's plus 2 kid that didn't make it to that point, because I don't know that I could pass it again. So it's a relief to know that I don't have to go through the exam again if I needed to move to another state.
Absolutely. And I think that's critical to what we do. We're a profession that operates across state lines, especially in a remote work environment like we have today, that it's critical that we have that language in place to support the practice that goes on throughout the nation.
That's great. And so, as you mentioned, 16 states that have already either fully adopted or it's on the governor's desk. There's 2 states that's on the governor's desk, 14 have passed fully. Another easily, I think we're in like the 20 range of additional states that are in process right now.
Yeah, absolutely. A lot of movement this year. And I know there are some jurisdictions waiting to see the outcome of this initial wave. So we'll see a lot more next year as well. And I think that these provisions are consistent with what everybody was looking for when we did those exposure drafts. We exposed this for comment in March, got feedback through May, and about 85% of the people that commented were in favor of the provisions we finally adopted a few weeks ago.
That's great. And that's an important message to give to our members, that this is member driven, and it was member feedback that got us to this point. So I appreciate that. Our next slide, Dan, we're running out of time, unfortunately, but there's a lot of pipeline trends. You were on the NPAG or had someone from NASBA on the NPAG. this is what we're driving towards. And it's not just about the exam alone or the bachelor's plus 2. There are other things we need to do. And
Yeah, it's about the pipeline, Mark. We want to make sure we have as many people interested and engaged in the profession, interested in entering the profession as we can. So great numbers to see. We have to, hopefully this is the start of something that creates a wave of new folks being interested in becoming CPAs.
That's great. Eric, let's move on to our next topic. Dan, thank you so much for your time today. I know you'll be around for a Q&A with the limited time we'll have left, but NASBA is always available. You have some great resources and connectivity. If anybody had a question, you can go to nasba.org to get more information. So thank you for that.
Thank you.
Okay, well, great, Mark. We're going to bring Melanie Lauritzen up now. And Melanie, I'll maybe stay on just because we're going to be doing a little bit of polling halfway into your segment here.
Absolutely. So let's go ahead and dive in. So every year, immediately after the filing season, we do a survey of our membership to see how the IRS is doing. Now, we've been benchmarking this for about a decade. So here you see where we thought it was rock bottom back in 2015. And then, of course, there was improvement. Then COVID came along, and then that derailed everything. And then we saw some more improvements, and every year's been improving. What's interesting with this year is the IRS services have pretty much flat-lined, which that's not a good or a bad thing, especially in this environment. So we are getting consistent service to prior year, but when you look at the big picture, we're not at pre-COVID levels. So on to the next slide. The PPS line, the Priority Practitioner Service Hotline, is one of the most important things for tax people because when we have a question, usually the IRS is the only one that can answer it. And so on this slide, what we see is, one, the IRS did answer the phone, and there was improvement there. And that's not on this slide particularly, but the quality of those answers or the phone calls that they took. What does that mean? It means they were able to answer our questions. So in comparison to last year, about 38% of our members were able to get through to the IRS and get answers. And this year it was about 57%. And also in comparison, in prior year, about 37% of our members were not able to get answers, but this year it went down to 14%. So this is definitely improvement. On the next slide. Okay, so we ask about our concerns for the next filing season, and generally speaking, people have one concern. They don't have multiple concerns, and it's about a temperate amount of concern that they have for it. This year, as you can see, people had a lot of concerns, and they were very concerned about it. And of course, the number one issue there is political distractions and also retroactivity of the tax laws. Moving on, we're going to jump into a poll here. So.
Okay. All right, so let me I'm going to push the poll, and please don't answer the poll question in Q&A. Do it via the poll function. So do you agree the IRS is on the right path to become a modern, functioning, evolutionary, respected federal agency for the 21st century? Melanie, maybe a little bit of context, additional context on that.
So back in 2015, the AICPA passed a resolution in order to try to help and modernize the IRS where they become a respected federal agency. And so what's happened is we have been seeing improvements. And now with all the changes that the IRS is going through, we'd like to be able to get a benchmark from people as to where they think the IRS is at with everything that's going on. So please take a quick look at those and answer those because it'd be great to get that type of feedback from you guys.
And this is one of the statements that Michael Faulkner, one of the goals of the current IRS Commissioner, Michael Faulkner, has stated. And this is going to be a little bit more Treasury-led, yeah. Correct, Melanie?
It is, and he says he's going to do it quicker and more efficiently, and he is focusing on modernization through AI. So we hope to see some results with there. Okay,
well, we're going to close the poll here in 5 seconds. So thank you. This data is very helpful for the AICPA advocacy team.
Absolutely. So what we also saw from the survey was, and this is an open-ended question where people can give feedback, and we saw the overarching theme that people are genuinely concerned about the future of the IRS. So it's very important that we get feedback from you guys because we are monitoring it, we're monitoring closely, and we are pushing to make sure that the services we deserve will be given to us. So with that, we're going to move on to some hot topics. And, obviously we're hearing the reconciliation bill. We have a new tool with FAQs. It's a very complex and sometimes confusing aspect to be able to understand. So by all means, please take a look at that. ERC, I already saw we had questions on ERC coming in, and it hasn't really been in the press, but we do know that as of April 15, the claims window already shut down permanently. And that's not talking about the proposals in the bill. This is what was originally stated in law. We also know that there are over 600,000 claims that are unprocessed. And if the IRS were to go all hands on deck, they would be able to respond to those by the end of the year. But processing claims does not mean they're resolving the issues. And there are disallowance notices that still need to go on, and that might take years. Also, I want to just remind everybody of the Taxpayer Assistance and Service Act discussion draft. There are provisions there that we really care about, like the SAFE Act, mailbox rule, prepare regulation, disaster. Those are still a priority. They're not on the reconciliation bill because they have no budgetary impact. So moving on. We have some wins, obviously, in the One Big Beautiful Bill Act, and we also have some concerns that are there. So the Form 1099-K, that's been repealed back to the old rules, and that would be wonderful for us. Section 174, R&E, again, we're going to be allowed to expense it. We have a little concerns in the transition, but again, it is a win. Section 163J, being able to deduct the business interest expense. Section 529 accounts, which allows for the expenses for the CPA exam and the prep fees to go through that. Now, the Section 199 Cap A, the QBI, is a win, but I have to disclose it and make sure everybody understands it. It is a win in that they increase the threshold, the deductibility from 20% to 23%. We're talking about 3%. They also loosened the calculations in order to qualify for it, but in practicality, we don't see a lot of those high earners qualifying for it. But what they did, and this is where it becomes a net loss for our members, and it becomes very confusing. The pass-through entity tax SALT deduction became tied to the QBI qualification. So in theory, if you are a pass-through entity tax that qualified for QBI, you should be able to have unlimited SALT deductions. However, if you are an SSTB, which is what we are, and an SSTB is a specified service, trade, or business based on the skill of the individual providing that service. So yes, it would be veterinarians, doctors, lawyers, and others who fall into this. They are not allowed to take the SALT deduction regardless of how much income they make. There is no income threshold. And I've seen in the Q&As come in and they're like, well, that makes it easier. We don't have to take the PTET. Not quite so. You still have to do the calculations. And it made it extremely complex for you to be able to go through this to come to the end of the day to say, yeah, you don't get that deduction. So let's bounce on to the next slide. So couple of things. So current situation, individual has the 10,000 SALT cap. And then of course we have the states that came up with regulations. And this is blessed by the IRS because as Mark pointed out earlier, it was the intention of Congress for pass-through entities to be able to take the SALT deduction. Now the proposed limited legislation. So that SALT, keep in mind, last night there was a manager's amendment, or this morning. So the SALT deduction is now to 40,000 for most filers. And then if you're married filing separate, that is half of that. So 20,000. It tied it to the QBI and it eliminated it for the SSTBs, but made it complex. But to add insult to injury, this is where it really gets nasty. They are disallowing some local taxes. So we're talking about gross receipts tax. We're talking about franchise taxes. We're talking about unincorporated business tax. So for those states that don't even have a SALT tax, they still were able to deduct, like I said, some of those gross receipts tests. So like in Texas or Tennessee, there are still some local taxes that currently they can take, but under this new proposed bill, they can't deduct it anymore. So it becomes very, very painful. So there was a call to action in an earlier slide that Mark Peterson covered. There's a QR code on that. Please take a look at that. Please reach out to your congressman. That has letters. It has statements. It gives you what you need to be able to push back on this. So moving on to the next slide. Oh, open forum.
There we go. All right, Melanie, that was very well done. We got lots of great feedback from the town hall community today on all of the topics that we covered. A lot of people appreciating the new pathway. Dan and Mark. One person asking, how can they find a list of the 16 states? I think that's something we probably can get out in the newsletter.
And we're going to have resources on that too. So both NASBA and the AICPA are going to have resources on an ongoing basis on the state activity. Mm-hmm. And then, the potential impact of, as we go through this process, if there's any disruption or if there's anything that we need to identify and gaps between states as we move to, hopefully getting uniformity.
That's right.
So again, bring lots of questions on the big reconciliation bill. One question came in, or a couple on this came in related to what has the AICPA discussions with Congress related to allowing the contingency fees for tax returns.
Oh yeah, Melanie.
So that is a topic that we have, and we definitely have a clear position on it. AICPA, by our own standards, believes that in general, you shouldn't use contingency fees, but there are a few carve-out exceptions. So for example, if you're going to have an audit with a government, you just don't know how long that's going to be and how much work will be entailed into that, so you can do a contingency fee. So don't confuse. IRS came forward with a regulation saying no contingency fees without any exceptions. And then the proposed bill says any contingency fee can be used. We need a middle ground. And there are some concerns by allowing contingency fees. That's kind of how we got into the mess with ERC.
Well said. So lots of information. We'll be active with the newsletter next week. We will be doing the rebroadcast on Tuesday, not Monday. So thanks, to all of you for joining today. I mean, Mark Koziel, is there anything else you'd like to add just based on all the summaries today before we move
I don't
into
know.
the
Very
resource
quickly,
section?
Eric, we have time to give the poll results, but real quick, 13% agreed, 40% disagreed, neutral 24%, not sure 22%. So there's more of uncertainty. 40% disagree. I would have expected that to be higher. So I think the poll results are interesting and important information for us to take back.
Absolutely.
Well, thanks for sharing that, Mark. And Dan, great having you with us today. So I'll just cover some resource slides here first. As Mark Koziel noted earlier, we're putting together resources to support navigating the tariff issue. I mean, we've got the tariff issue, we've got the big reconciliation bill. You've got the economic uncertainty. So plenty of things for you to be playing the trusted advisor role on with your client. One thing that we absolutely are going to be leveraging is the Gen AI capabilities related to the tax bill. This is our partnership here with Blue Jay. Some of the resources that we've put out, that they have a lot of capabilities related to tax planning. There may be a role that they'll be playing for us in really helping analyze the tax bill in the coming weeks. And as we said, that Mark, you said it's in the third inning, so it's going to be advancing. And as this finalizes, it will become an important discussion between you and your clients, and something that you want to do as it is developing. We've got this booklet that we handed out at our AICPA council meeting last week, Guiding Principles of Good Tax Policy. So you can leverage that resource. And here's all the different digital resources that we have related to the town hall. The rebroadcast will be on Tuesday, March 27th. Hoping you all will have a great Memorial Day weekend. And the next time we'll be coming to you will be live from the AICPA and SEMA Engage conference, which is in Las Vegas. And this will be June 10th, Tuesday at 2 p.m. So great being with you today. I'll let you close out to the town hall community, Mark.
Yeah, thank you so much for all that are here. We had over 11,000, I think, this week. I am excited about June 10th. I hope to see all of you at Engage. And for those who can't make it, there's also a video broadcast of that in addition to the town halls. We're going to have over 5,000 people. It's going to be the best one yet.
Thank you. Thanks, Mark.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.